The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Here we are going into the 16th of March. Tomorrow is a big day, folks. Tomorrow is, I believe, St. Patty's Day, and they will be dyeing the Chicago River green as usual. And if you can find somebody there that doesn't have an alcohol in their blood, they have to be coming from Utah. That's about the only thing I know. That place really rocks and rolls for St. Patrick's Day. I'm sure you've seen it on the news before, but they put in food dye. It doesn't hurt the fish or anything, but it's a big deal with all the parades. There's been a lot of movies about the Chicago River. If you remember the movie The Fugitive with Harrison Ford, they showed it there, plus a couple of the ones with what was the guy's name? Eddie Murphy with his Beverly Hills Cops had two of the things, and several of Clint Eastwood's movies were done during that time. Okay, let's talk about this chart of the DAX. As you can see, we've had some expansion numbers up here, but I wanted to focus, this happened yesterday, which I thought was relatively interesting. This 1.73 expansion that you have here, I always look at 1.618, but the 1.73 happens to be a key number that is related to the Pythagorean theorem. A squared plus b squared equals c squared. And I was, thought it was really cool. Well, I found I didn't find it, but one of our dentists sent me this really cool thing from Shakespeare in 1609 that showed how all these numbers came together. It was a riddle, a puzzle that you had to put together. And they put it together by geometry, and it showed how you connected all the dots, and there were codes everywhere. And it all led to latitude and longitude, and that happened to be at the exact point of the Great Pyramid in Giza, and about 20 miles outside of Egypt. So I said, oh man, this is really good. I'm going to send this out to let everybody see this wonderful geometry. I sent it to two of the smartest people I know, one in London, the other in New York, and they both came back and said this is a bunch of bullets compostus, which you as know is in the world of fertilizer, that's what it was. It was just someone, making something up that made it look cool. And it was cool. And if you didn't check it, that's it. So I guess that's under the news of fake geometry or whatever they want to call it. But it was really interesting how it worked. The geometry part was right. It was the part that had nothing to do with old Bill Shakespeare. So anyway, let's go on and look at some of these other things that we've seen here. Well, we've had this pretty big expansion in some of these markets, but folks, we were only up a slight bit yesterday, about 1%, but there was one market that just went absolutely wacko, and that was the Hang Seng Index. I mean, it was just literally, off the charts. Oh dear, don't tell me I don't have it. Are you kidding me? I'll have to put it up at the break then. Oh, darn it. I just wanted to show it to you because it was happening while I was in Hong Kong, and we had a perfect Gartley that the day it was making a perfect ABCD right at a 382 down around 20, I think it was around 21,500, something like that. And yesterday, it was up 2%. It was up 454 points into new high ground of this move. So that's a huge gap. I mean, tremendous gap that I will bring to your attention once I can get it to come up, which will be at the break, because I'm afraid if I try it now, it will not work the way I'd like for it to do, because I'll probably lose data or you or something else. So I don't want to mess with what I will be covering it at another time. Now, one of the things we certainly need to talk about, of course, is this big move that we've had in the bonds here. This was not unexpected. We thought that there would be a short covering rally here, and you'll see here that we had that 3 drive to a bottom pattern that stopped right at the 1.618 expansion from the low on March the 10th. That came in right at that 145 level. And then, of course, you had this big rally, 3 points, that went right up to 148.20. We've now backed off a full point from that level. But what's interesting about this, folks, if you look to the far left of this chart, you'll see another dark line, a dark red line that shows a 3-point move that happened between the 21st and the 26th of February before the market, took a flying Walinda and dropped another 8 points down. This is all this market has done. If you'll notice what happened to the bonds yesterday, they stopped at the exact 382 of that retracement, which was 148.20, and then it started, back down again. So this could just have been a bear market rally, caught up in the emotionalism of the Federal Reserve. And believe me, Bloomberg is not responsible for this, but CNBC certainly is. They make such a giant promotion out of this. It is really it's really unbelievable. It's almost, well, it's even worse than the days when we had M1 and M2, money supply M1 and M2 back in the 70s and 80s, because the people on the financial press at that time were making big deals out of it. But nothing like what CNBC does. They have their own economist, Steve Leeson, and they have a whole bunch of people coming on giving their opinions, and there's nothing wrong with that. It's just that they blow it totally out of proportion, in my opinion. It's a quarter point. Give me a break. That's the fourth increase in 11 years. Give me a break. What happened to the Federal Reserve? Have they been on vacation? And then the question that someone asked Janet Yellen during the question and answer period, well, what's going to be the effect of the poor people that have not had any relief during the last 8 years? And she said, well, that means that there's a positive outlook on the economy. Well, I think that's the right thing to say. Okay, let's move on to the next one. One of the questions that we had put before us was the fact about the U.S. dollar and why I thought that the euro was going to rally. We had several charts that we were looking at. One, of course, was this one right here, which is the chart on the dollar index. This is the one before the report came out. If you'll notice here that we had made a perfect 61% retracement back about 6 or 7 days ago. That stopped there for 2 different days and then had a pretty good move to the downside. That was the move on Monday. And then after that, of course, we had the big move on Tuesday, and this was before the report, folks. So if you'll take a look at this, you'll notice that it was already starting down, and that's what led me to believe that we were going to have a relatively good bounce in the U.S. dollar, and it's nothing more possibly than a bear market rally, because long term nothing has really changed in the euro. But that's what we're watching. But if you take a look at where we are right now in the euro, this is also the day before, and you'll notice that the euro had already started up. We had just come off a 61% retracement. That was the exact opposite of what we had with the U.S. dollar, because as you know, the euro is about 50% of the dollar index. We'll take a little break here. 877-927-6684.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were talking about the U.S. dollar and the euro. I also wanted to talk a little bit about a couple other things related to the U.S. dollar. One was the British pound. As you can see here on this chart, we had a beautiful Gartley there down at the 78% level. And as you can see, it went about 20 pips or about $120 below and has since, rallied almost $1,200. What's interesting is if you come into the Tiger Den, as many of you folks do each day, you'll notice that we had this explosive breakout this morning when I think it was, I don't know what it had to be. Oh, I know what it was. The ECB didn't do BCE, I guess, whatever it was. But anyway, that's what caused the breakout. But Mr. Z in the room was flashing, a buy signal to buy it at 22.85 on a stop, and it went from 22.85. It moved $600 faster than Johnny could pick up his spoon to eat his soup. So I just made that up, by the way. I was trying to put some words together, but I couldn't. Anyway, that's how quickly it went. Now, notice that chart very, very closely, because you're going to see just above this level at the 123.85 to 123.90, you're going to see a big 1.618 expansion number. Pay really close attention to that, folks, because if we get above 124 in the British pound, this is going to possibly change the whole complexity of what the pound could be doing. Most of this, 99% of it, I believe, is due to the cannon fodder that goes around the time of the Federal Reserve. They treat them like rock stars. They never did this back in the old days. Volcker used to come out and say, rates are going higher by 0.25%. Thank you very much. And then he would leave. But now they have a whole production. They give her 45 minutes to an hour, questions and answers, all that stuff. So it's a big financial production. And believe me, this is put on by the, CNBC, because this is how they get people to advertise there. And believe me, it's a very, very expensive place to advertise. And they do it on all the channels now, because that's what the people want to go. Yeah, Paul Volcker is a huge man. He's 6'8", and he's a really nice guy. He's just as I was fortunate enough to be on a couple of panels with him many, many years ago. Back in one was in my days at Drexel back in '78. That was before he was Fed chairman, and then again was in '92. I met him there, but I was not on a panel with him at that time. He's a really nice guy. The other guy that is really a nice guy, I mean, super cool, and one of the smartest men I've ever met is Ben Stein. Ben is the son of Herbert Stein, who was a Nobel Prize economist, and he's done so many things in his life, but he's a really, really smart guy and just as nice as can be. He lives in Malibu, and I actually traded an account for him for a year. It was an account that was set up by a Forex bank, and I was to trade only the British pound, and all of the money that I made at that on that trading was to go to his favorite charity, which is the ASPCA, the Society for Prevention of Cruelty to Animals, and we had a pretty good run that year. So he was very thankful. I've seen him at the airport a few times, and he still remembered me, which was pretty good. He's a really nice guy. Oh, let's get on with the other stuff, and we'll not waste any more time with this. I do want to post this chart of the Hang Seng just to show you what it was like, because it was such a beautiful pattern that we had here, and with the explosive move that we've had recently, it just really is really. Oh, they've already put it up today. This is great. I didn't think they did. Usually it's not till after the close. This will only take me 1 second, folks, and then I'll have it ready to go here. And I got to check the monitor here to see what you folks are asking me, and then we will go. We've got a call. Hold on just a minute. There we go. Oh, there you go. Yeah, that Ben Stein actually goes down to Sarasota, Florida, just south of Clearwater, and about 60 miles. And I imagine he probably has some relatives or something there, but I've never seen him, and I've been to Sarasota and Longboat Key quite a few times. Okay, let's take a quick look here at this Hang Seng Index, because this is what I wanted to talk to you about. This was the pattern we were looking at when I was in Hong Kong, back on the, my talk was on the 4th of, the 3rd and 4th of March, and we were looking for the low to come in. As you can see there on the 10th, we were looking for that ABCD move to occur right around the 23,000 level. And as you can see today, we had this big gap up. We actually almost took out the high from September, but not quite. But we left this huge gap. This was up 2%, folks. This was a really big move to the upside. So remember that. The other thing that's important about this chart is if you'll look at the 786 retracement level that's marked there with a line, you'll notice that the market gapped above that line on the opening that day. Boy, that was a sign that you do not want to be selling against that 78% level when it gaps above it, because those are the things that are very, very instrumental in taking money from you. I read an interesting quote from Peter Brandt yesterday, and that is that it's much easier to lose money faster when you're wrong than it is to make money faster when you're right. So that goes back to the old adage is to take care of your losses, and your profits will take care of themselves. That's another thing that we want to watch. I tried to find the book Viewpoints of a Commodity Trader. I have 2 copies of it, but frankly, I've got so many books. I looked through the darn thing, looked through the place twice, and I couldn't find it. It's a little green book. I'm going to try to find it over the weekend and bring it up to tell you some of the great vignettes that are in there from that great trader, Roy Longstreet, and his son, who was a good trader also. Okay, next we want to talk about is the gold, the GOLD. So let's just put this up here, and we'll look at it as it was on Friday. As you can see here, we completed the big ABCD. We've already talked about that. It was right at the 78% level. It just had a lot of things going for it at that level. It just stayed there for 4 days, and then of course yesterday, it just took off like a wounded duck, and we've got all the way up to 12 into the 1230 area. Right now, we're almost up to the 61% retracement of the whole down move. I mean, that's very, very close to that. So this tells us that we're probably looking at a pretty good, rally. Well, duh. We've already rallied more than $34 from the bottom for sure. So we have $94.34. We've already went $40 from the bottom. So I can't buy a breakout like this. Regarding the breakout, folks, yesterday in the gold market, right before right before the Fed time. It was trading around 12:02. About 10 minutes before, one of the folks from the den called me up and asked me, could I put a buy stop, in on the gold in case it runs. I said, well, of course. I said, but you're probably not going to get, a very good fill. He said, well, I want to put a buy stop at 12:06, and if I get filled, I'll stop it at 12:02. And I said, okay. And so the thing took off like a wounded duck. I just went straight up. And so I wondered where he got filled, and he called back and told me, and I'll share that with you at the break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've been asked to take a look at the Australian dollar. And as you can see by the green line that you see here that's overlaid on the chart, that's basically the spot price of gold, and you can see the correlation is really quite high. That's due to the fact that there's quite a few Australian gold mining stocks that people follow quite a bit. And that's one of the things. There's a lot of gold over there along with other things. But you'll notice that the foreign exchange cross rate of the Aussie versus the U.S. dollar is quite powerful. Now, this has been in a bullish trend for quite some time. As you can see, it took about 2 weeks or more to make a 38% retracement. It held that level, and then with the Federal Reserve in yesterday, it gave a big boost to the Aussie versus U.S. dollar, and it shot up quite a bit. Now, it hasn't continued like some of the other cross rates, and that was basically due to the fact that last night our time, early this morning, their time yesterday, it was saying that you had a really bad economic report where there was a lot of more people unemployed than they actually finished. Now, Danny, you're right. I forgot to finish the story. Anyway, and it wasn't you that called, Danny. It was somebody else. But anyway, after the market took off and it got up to about 12:22, I got a call back, and the gentleman said that he had put his buy stop at 12:05, and I asked him, where did you get filled? And he says, well, I had an order to buy two. He said I got filled one at 12:10 and one at 12:12. And I said, well, they went up from there, so you're certainly okay. He says, but that's really a big move, and I said, yeah, it certainly is. But, at least it's profitable. That's see, the problem with what happens during Fed time, folks, is that people have been trading a long time, know that the liquidity during that time actually dries up. If you've got a platform where you can see the bid and offers, I use Commodity Code Graphics, and you can see the bid and offers and what the volume is. You'll notice that the volume just literally dries up at that time. And it's the right thing to do because it's a big unknown, and people don't like to do that. And that's correct. Someone just mentioned you don't want to use stops in fast markets. Well, you do if you're on the wrong side, because of the fact that, you could, actually can keep going up almost forever, as we can see, what's happened in stocks, right now. So that's that. But, after she's done speaking, liquidity comes back, and that's it. So, Danny, you're asking me the strategy in my gold right now. And, of course, there's nothing as frustrating as a sold-out bull, which I am. And what I'd like to do is I want to see a nice ABCD pattern over the next 30 minutes on a 30-minute chart. This is not probably going to happen until early next week. I don't know where it's going to come from. But the ideal situation to buy the gold, Danny, would be on a 30-minute chart if you get an ABCD correction, just like we saw in that Hang Seng index. It's just, you look for that type of pattern over a period, say give it 4 or 5 days. If you could find that, and we'll be looking for it here, is to find the ABCD pattern, and then you'll see that they'll be looking at something very, very interesting on this, because it could be something that will be very, very exciting. That's if the gold does. This is the first chance that gold's had. We've made the 61% retracement in a week. We bottomed a week ago Monday, and so we've been up for 7 days. So we're right near the 61% retracement on the gold. So I want to look to, to see what the retracement comes. And there will be a retracement coming. Well, I think there will be. But, it does look pretty good. Now, silver doesn't look anywhere near that well. It's rallied, but nothing like what's happened. Well, I shouldn't say that because I haven't looked at it early this morning. But as of last night, silver was lagging behind quite a bit. In fact, all commodities, folks, as we mentioned here on the show on Monday, all commodities were in the grains: wheat, corn, beans, oil, meal. All of them were completing Gartley patterns on Monday, and they've all rallied a little bit from that level. Now let's go back to the crude oil here for a second. We have a question about the crude, because if you remember, we were watching crude really closely down at that 47.32 level. The low came in at 47.10. We've now rallied just about a little more than $2 a barrel. If you'll notice here, up around that 51 level where the old lows broke down from the lows in January, that should offer pretty strong resistance, I would think. So we did have that, that hammer candle 2 days ago. And so that's what you want to be watching. That was before the Fed acted. And, of course, when the Fed came in, it just gave it a little bit more boost. And that's mainly because, that's what you're looking at. So that's it. Listen, Dudette from the UK, at the beginning, I did talk about the dollar index and the fact that we were expecting it to come down quite a bit, i.e. the euro to go up. And we talked about the British pound having some resistance at 123.80 to 90, and the resistance on the euro would come in around 108. You'll have those. That's correct. You'll have those for sure. Anyway, that's what you want to be watching. So keep an eye on these because it's very interesting of what we're looking at right here. Okay, now as far as the stock market, we had one big, I always save what I know the least to near the end, but let's just take a look at the weakest component of the stock market, and that is the, hold on one second here. We'll take a look at the IWM. Remember, this was the leader that started us up on 2009. It had already bottomed. And you'll notice that we've now made a 61% retracement back of this big move down. Everybody that bought it into the speech to Congress is still underwater. So that's pretty much what we're watching as we're looking at some of these things right here. And on another note, we have I had an email this morning from our good friend Norm Winsky from AstroTrend. And he mentioned that his model had begun to move into the sale zone. That doesn't mean the sale is going to be yesterday or today, but within 2 days of this time, which gives us through to tomorrow, we'll be looking at a move that could take us down quite a bit. Folks, this is basketball season, as most of you know, and Arizona has a team here in the tournament, University of Arizona. I got a call from my college buddy. He was a college professor for 30 years at the U of A. He retired a couple years ago, but we talk all the time, and he's my poker playing buddy. And he called and told me about one of our people that plays poker with us. I knew this gentleman, but he was not a friend. I just played in games with him and stuff. But he was an accountant here in town, and he got very, very bullish about Trump becoming a president, and so he started buying stock very, very heavily the night before the election. He was buying, the day before the election on the 7th, he started buying, and as you know, it was down a little bit, but nothing like it was on the eve of the election when it was down 800 points in the Dow, and he had a futures contracts, and he also bought some of those on the election night when it looked like Mr. Trump was going to lose, but he bought it right near the end, and he started buying, from what Larry told me, you're going to like this story. This has got a real interesting twist. We'll be right back. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI, oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I was finishing the story about the gentleman here in Tucson. He was a public accountant, CPA, one of our poker-playing friends. And what's interesting is that he started buying, on the 7th and 8th, as much as he could buy, from what I understand. And he had put all of his customers' funds into the market, and he just kept buying and buying and buying. That all stopped on Monday. This past Monday, not this Monday, but the Monday before, which would have been the 3rd, I guess. And he disappeared, folks. He took all the money out of the accounts and he left. He left his wife. He didn't have any children, I guess, and he's gone. $3.5 million, and I don't think that's enough to leave town for, but he took off. He took off and left. Now there's warrants out for him and a couple of charges are against him, but evidently he absconded with all the funds. He cleaned out all the bank accounts and took off. That's a big shock here. No, he wouldn't go to Mexico. That much I can promise you. But anyway, that's really a big shock around here. So, he sounds like he took a course from Russell Wassendorf. But anyway, yeah, it could be the Russians, Steve. Yeah. Okay. The other question is asked is, the Arizona is playing in Salt Lake City. And one of you folks from that area asked if I was going to be up there. No, I'm not that big. I mean, I like to watch Arizona, but not a big fan. But in 1979, when the Indiana State Hoosiers were playing again, in the Indiana State Sycamores were playing against Magic Johnson and the Michigan State Spartans, I spent 4 days in Salt Lake City with my sister and my brother-in-law, and my couple of my cousins came out from Terre Haute. There must have been 20 people from my graduating class out there. So it was really a lot of fun to see to see him at that time. We had a really, really great time. So I do remember it very, very much. That arena had just been built at the University of Utah. Okay, let's take a look at something that I think is pretty important. And the next one, this is the chart that I think this week is important. It comes from Investors Intelligence through one of our folks who listens to Jim Cramer. He put this on his show the other day, and it shows that we're near a record which was set way back in 2014, where we have the largest divergence between the number of bulls positive and the number of bears negative that we've had. Now, history says that this usually ends badly, but we live in interesting times now, so maybe it's not going to happen this way. Let's just judge's ruling. Yeah, we have to wait for that one to come out. So we'll see what's going to be happening with that. But it just doesn't end that way very, very often. Remember, we still have some gaps here in the Dow Jones Industrial Average. We filled the first one this week. We did this late Friday, and everybody that has bought stock in the S&P or the S&P or the Dow Jones or the IWM are underwater from the speech time of February 28th. It's only the NASDAQ that went up and made new highs. Those folks still have profits. So this is another divergence that we're seeing, but that's neither here nor there. We have other divergences, but that's the main thing. The key, folks, to me, is to watch this bond market. If we get below that 147 level again, that's going to tell us that, most probably all we did was do the same thing we did a month ago when we had a big 3-point rally. This was a 3-point rally in a very oversold market. Let's just show you this again because I think it's this important to pay attention to, because if the let's just take a look here. If the Dow, if the bonds can now rally above that 149 level, that's going to tell us that this thing has legs, and we could see it most probably get up to the 151 level, which would mean we would have a 7-point rally, more than twice what we had during February. But the key is getting it above this 148.25 level, and if it can hold the 147.20, 147.18 level, then it's got a chance for some more rally. But frankly, what it looks like is we're watching some really interesting bear market rallies in some of these things. That's including the euro, the pound, all these things. This is just a $1 or 1-day rally possibly. So keep an eye on that. It's very easy for the bonds to pop that much because there's so many people that have been bearish these, and they reacted quite nicely off of what should have been a bearish response to the bonds, but they still rally because the market's basically oversold. We see this all the time. It's not rocket science. By the way, folks, the harmonic number in bonds is 20 ticks, Bill. Just go back and look. You'll see 20 points is usually spot on. Now, as the market starts to expand like we have the last day or two, it could get out to a full point. So you'll be watching it. On the low of the day at 48.66, in the crude oil, I am not sure if crude oil got to that low yet. Did we get to that low in the? Yeah, we got very, very close. Yeah, watch that. You're right. That's a spot on number to watch, Pedro. That's a very good one to watch. You don't want it to get any below that. That's a really key number to watch. Just like yesterday, the number was 48.20. You do not want it to get it below that 48.50 level for sure. Otherwise, all we did yesterday was make a 78% retracement of the previous day's range in crude oil. So nothing really dramatic is happening in any of these things. And even in the grains, we had a pretty nice rally of 17 cents in beans off the Gartley bottom. But, we really haven't gone anywhere. So it's just a situation where it's rather really something. Anyway, we want to remind you that I was supposed to have Rich Anderson as my guest today, but we're going to try to have him on tomorrow. That was my fault. I thought P was for Pedro. I thought it was Pete from Park City that asked me that question. So I predict that was that's what will be happening. Anyway, well, the NASDAQ has been the leader all along. So the question is how much of a leader it's going to be. It still looks like the strongest, like what was the one of Larry Williams's favorite sayings is the one-eyed man is blind. The one-eyed man is king in the land of the blind. So that's basically what we're watching in some of these things, because the market reacts so much to the news now. It's just really amazing. We've always done that in the market, but it's even more so now with the the way they have all these different programs and 24 hours a day on financial channels like Bloomberg and some others. But that's neither here nor there. So we'll keep an eye on some of these things. But the NASDAQ certainly has been the strongest, and it continues to be. We did make new highs in the NASDAQ, but what's amazing is we didn't make new highs in a couple of the really big ones in the NASDAQ, like Amazon, probably one of the the better companies in the world. It's certainly the slayer of the brick and mortar retailers. That's absolutely for sure. One other one I wanted to mention to you is this Japanese yen, folks. This is what we were doing before the report, and then we had this big sell-off in the yen down to the 113 level. If we get that yen below 112, there's going to be trouble in River City over in the land of Japan. So take a break here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to have Rich on tomorrow. Hopefully, it was my fault, but we'll get him on tomorrow. Hopefully, so. Let's just do that. One other question that someone's asked me, and that's about Elliott Wave. Folks, I looked at Elliott Wave way back in 1970 when John Hill took me under his wing to mentor me. And, I always had a difficult time because of the variations of the waves, whether it's a 2 or a 4 or a 3 or a 5 or, the different structures that you can have. And so what I did was I just got accustomed to using the Gartleys and the butterflies and the ABCDs and just keep it down to just two, major fib points on corrections, which are 618 and 786, and on expansions, 1.27 and 1.618. Try to keep it that way. I realize there are other numbers up there like 1.73 and 707 and some of the other numbers, which are our fib numbers, but I try to keep it just as simple as I can. And I know the difference usually between 618 and 707 is, not too much for trading purposes, and 786 to 0.88 is, not too much. And so I try to keep it just as simple as possible and realize that there's only one person that gets the exact high or low, and it's never me. So that's really what I look at when I'm watching, the situation going on with Elliott Wave. So I know that it works. It's too difficult for me. I had trouble with counting to 5. That was the 3 years I was in the 4th grade. But I finally worked through it, and I've got up to 10, so I keep it as simple as possible. But I'm just not an Elliott Wave person, and I've met some really smart Elliott Wave people in my time, Bryce Gilmore being numero uno in my book by far. And I would certainly put him up against anybody. And he also uses it with a little bit of creative realism, I guess, as you would call it. But in retrospect, folks, I am really as good as it gets. I can look at a chart and go back and point all the highs and lows out the past.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on